Hello friends, welcome back to my channel Technical Analysis Made Simple. In this video, we will be talking about demand and supply zones, which is a little refined form of support and resistance. It provides a better idea and better placement of your trade. But before that, if you haven't watched the first part of support and resistance, which is marked here, then please go and watch that first. So we will understand about demand and supply zones and then we will look at practical examples. These examples will be the same examples which we discussed last time, and here we will try to see how they look with respect to demand and supply zones and how it provides a better opportunity to place your trades. So demand and supply zones are basically areas. The demand zone is an area where there is a buyer accumulation, and supply zone is an area where there is sell accumulation. I understand the same statement was made for support and resistance as well, but then here the word area is important. You need to understand that support and resistance areas, they are not hard walls, they are like barbed wire fence. So a price can push through that. It may or may not break that. That is, let's say a price pushes through 100 rupees towards the upside and then gets rejected at 100 and closes at 90. So in that case, we will not consider it to be a breakout. Similarly, the same argument holds for the downside. Let's see few examples. So this is a chart of Reliance. We discussed this levels if you remember. If you don't remember, please go back to the last video and refresh your memories. Now let's see with respect to demand and supply zones how we can see this. So here there are three prominent zones which can be marked. The first one is obviously this. This is a very obvious zone. You can see how many times price got rejected here and finally it broke out. So how to mark this area? We will see that in detail when we discuss how to plot this on TradingView. But here try to understand. So we take the lowest point where it is getting rejected and the highest point. So if you consider this pin bar and this green candle, here you see that the pin bar top and the green candle top, these both are rejections. Second point is you have to keep in mind the change of polarity. If you see the pin bar top and here the bottom of this hammer kind of candle, this whole area is acting as a, here it is acting as a supply zone and here it is acting as a demand zone. Similarly, let's see how these two areas act. So here if you see, this area is acting as a supply zone here. I have marked the tails because that is the whole area where price can get rejected, and here it is getting rejected at the lower part of this zone. Similarly, if you see this area, the lower area, this is acting as a demand zone because price is bouncing from here, right? Price goes up, it comes down to test this zone. This supply zone now turns to demand zone, price bounces and then breaks it. Okay. Once it breaks it, observe how this demand zone changed into supply zone. Price came down, went up, could not break this and fell again, right? Let's see one more example. This is a chart of Vishaka Industries, the weekly chart. These are the lines we plotted last time. So let's see how we can view this from a demand supply point of view. These are the three prominent areas that can be marked. Let's start from here. Here we have a thick demand supply zone. Why is that? Because we have big tails here. And then if you see this part, the price actually penetrated up and then fell back. So this whole area, that is where it was taking support and where it became a resistance. You have to combine these two areas. Now this become your demand supply zone. So this was acting as a demand zone, price came down, now it changed to supply zone. The second area is this one. Here it was acting as a demand zone. Take the tail from here. Here it is acting as a supply zone. Take the tail from here. So this becomes your demand and supply zone. As many times price will penetrate this zone. So for example, let's say price penetrates here, it will get rejected until unless it goes up and sustains above this. Check this area as well. Here is it is acting as a kind of supply zone. This is very prominent here. If you see, this has now changed to demand zone, which means the price is trying to change its trend. Also remember that whenever price is within demand or supply zone, it becomes very difficult for it to move. See these candles, these are very small. These are also very small. Observe here, these candles are very small. So you should not take any trade inside this. And see when it breaks out of it, you see a big fall or a big rise. So you should always be targeting these mid areas because here price can move very well. If you try to buy something in between of these zones, it will face difficulty to move. Now let's see how to plot this on TradingView, and also we will be discussing how to navigate through that. Okay, this is the same chart we discussed last time. So these were the lines we identified and marked last time, right? I am removing these lines. So to remove all the drawings, you can just right click, go to remove drawings and click it. Everything will go off. Now how to mark this? You can use lines or you can use shapes. I generally prefer shapes because it is better. I mean easier. So see, the first area is here. You take the tail from this and then just combine it. Okay, observe this. Here it was acting as a support. The top part of this zone was also acting as a support. The lower part was also acting as a support. Now see how change of polarity is acting here. This rejection candle, these four rejection candle and this candle. In fact, even this candle. These are all getting rejected from this area. So we cannot be bullish on this stock until unless this breaks above this and sustains. See how many time it has got rejected from this zone. So this gives a very clear idea that where you should be buying and where you should not be buying. Suppose someone tries to buy above this because this high is gone. It is not necessary the price will sustain because it has got already rejected from here. And that's where candlesticks actually help us. The line chart won't give you this information. Let's mark another area. If we see the current market price, this is the demand zone and this is the supply zone. What do we see here? We see that the demand zone is very thin and supply zone is pretty thick. So it is possible that price will find it difficult to break above than to break down. This is another concept that you should remember. However, there is no guarantee where it will break. It can break any side. These are just viewpoints that we will have, and we will not initiate any trade beforehand. We need to wait to see and confirm where the price is trying to go. I hope these pointers were clear to you. Let me know in the comment section if you have any doubts and we can discuss over that. In the next video, we will be discussing about dynamic support and resistance. It will also be a very important video. Do not miss that. And if you have not subscribed till now, please do that. Also press the bell icon because without pressing that, you won't get a notification.